Good morning, everybody. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for March 19th, Thursday. One more day to go for the weekend. We continue to trade whatever is going on with crude market. Uh, West Texas Intermediate here at home hit $100 a barrel overnight, trading at 97.24. That is the driver for the grains. We did have another 7-cent range overnight in corn. May corn trading back to 67 and a half. D's corn, 95 and a half. We're going to get that $5 print today. It sure feels like it, guys. Remember, the contract high was 512. Great opportunity up here if we're able to get something done. Because fundamentally, we probably shouldn't be here. This is all due to um, what's going on with the price of crude oil, period. I think if we ever end this conflict in Iran, we'll go back to trading fundamentals. Other negatives out there to watch, which could impact pricing, certainly going to impact a lot of producers. Bottom line is the price of fertilizer has spiked. Of course, you're all familiar with that. Obviously, I'm not telling you anything you don't know. China has started to hold back some of their own fertilizer for their own internal use. So that export is slowing down a bit. Again, that's going to pressure producers. It is the middle of March. Most of the time, the planters don't get started um, north of the Mason-Dixon line until after April 15th. So we still have a month to go. That's something we're going to have to continue to watch. But the good outcome of all this, if there is one, is the fact that we've got almost $5 new crop corn. November beans trading at 11.53. The high of the move so far for November new crop beans was up in the 70s. We spiked it to um, almost um, almost 11.75. So we've had a recovery in this uh, in the new crop stuff, and that's really what I'm focused on right now. Old crop stuff, I think, is more where the speculators are. So a lot of this length of the market has been, funds showing up in May and July corn and May and July beans. So overnight, the markets were bid, not crazily bid, but bid. Um, May corn up 2 cents, but we did again had another 13-cent range in beans. July Chicago wheat with another 10, 11-cent trading range, up 4.5 cents. And I think that's going to be continue to be what we're looking at. The rain is timely in South America. There are no more exports currently coming out of Brazil for soybeans to China because of the um, phytosecurity questions. Basically, China said, there are too many weeds and so on and so forth in the grains. Really, it's an excuse for China to not take beans from South America. So that has got to be something we're gonna have to watch unwind. Moving forward, I really think that, I sound like a broken record, but this is all because of crude oil. Tell me where crude oil is going to be next week, and I'll tell you probably where grains will be. Um, Overnight, a sharp down move in silver. Silver is about to has tested 65 bucks again, down $10. Gold down $343. That's something that you're going to be watching here as we move into the weekend. The U.S. dollar, obviously, on the flip side, is you know repricing as well. So the fact that the Fed is not going to cut rates, that's kind of all wrapped up in there. But right now, you do have the dollar trading close to par, which is the highest we've been in several months. So that's going to be something that we'll continue to look at. The fact that we've got higher prices in the grains, despite the the strength in the dollar. We're almost at a 1 year high in the dollar. If the dollar takes out 101, that'll be a 1 year high. We traded as high as 100.53 last week. So we're hanging in right there. So that's going to be something else we're going to be watching. A good opportunity for cotton producers out there. Some of you guys I know, not a lot of you, but 72-cent cotton, um, a really good recovery in cotton. Please take advantage of that. Moving on to the protein complex, as the stock market goes, so will cattle most likely. That's going to be the most direct correlation. That's the only thing I'd really be worried about right now. You've got the S&P down about 40 points. You've got the Dow Jones down about 250 points. In my letter yesterday, I did put out, what a 10% correction would be, and we're very, very close to that math problem. 10% is a normal correction. You have to remember, and I'm going to wrap it up with this: the stock market in the last 11 months, the Dow Jones went up 38%. The S&P went up 45%. So yeah, we're going to have a correction obviously here, but I'd rather have a correction after a 45% rally in 11 months than if we were down on our lows, right? So on that note, this is Chris Robinson, Robinson Ag Marketing. Give me a call, 312-638-8868. Lots of opportunity. Today is the 19th. On the 27th, they're going to announce the RVO adjustments. And then at the end of the month, the 31st, we're going to have planning intentions. Now, everybody's going to argue about planning intentions. They always do. But that's going to be a big report with lots of risk. Also, potentially lots of reward. All right, guys, have a great day. Take care.